Alright everyone, here we are with ticker symbol AAPL, Apple Inc. And before we jump into this chart, I want to say welcome to all my first time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Apple Inc. has had a run. Obviously, it had a recovery from way down here at 103, bounced up, and it recovered from almost 105, 104 and some change. And then it started to run up till it hit these highs, and as we zoom in here, we can really get on the dot there at 126 and some change. And since then, it's been in a bearish run. The bulls slightly appeared yesterday, right? Or not yesterday, but the day previous to Friday. Obviously today we're doing this a little bit later in the weekend, but in terms of yesterday, as in Thursday, it started to rise, and then this is what we got to see for Friday. It was hanging out kind of around this area, and then Friday it continued to run, broke over the 50-day moving average. It actually even went ahead and leveled off slightly above the resistance and quickly fell. So that's a very volatile day there. And here we are now at 118. So one of the most important numbers here, which is the lowest point of this bearish run and dip since falling from here, is down here at 118.35. I'd write that down. Super important number. If that gets broken through, this could start to see newer lows and newer support levels. Now, I'm going to move our support and resistance to their new locations, and we're going to look at some important things for the coming days for Apple and what to bear in mind as this plays out, and also where we are on the chart. Obviously, the 50-day moving average is above the price at 118.88. and the 50-day moving average is 120.16. I'd write that down. Super important number. 120.16 lets us know on what side of the chart we're in. We're in bearish territory. The moment we're above it, we're in bullish territory. Now, the most important thing for the bulls is to break through the 50-day moving average to start to work their way up, and then reach for the resistance level. This resistance level is 120.51. Every bull is going to want to break through that. But before getting there, they need to break through the 50-day moving average. So if 120.51 is turned into a support, that's a good sign that the bulls are starting to gain control. And they accomplished two things. They broke through the 50-day moving average, getting back into bullish territory, and they broke through the first resistance level. That's going to allow them to pull further away from the 50-day moving average in an upward direction. So 120.51 is our first resistance and most important one to turn into a support, so that the bulls can break away and get deeper into bullish territory. On the other hand, we have what the bears want, and the bears are going to want to break through this, and that's our support level. Our support level is 118.74, and at 118.74, the bears are going to try to break through that fairly quickly, because they're going to want to aim for the lowest point, which is down here at 118.36, as I mentioned earlier. And if that gets broken through, this could start to hit newer lows, reach newer support levels, and break further away from the 50-day moving average fairly quickly and work its way deeper into bearish territory. But before getting there, obviously the bears are going to want to break through 118.74. And I want to emphasize to all investors, we're a lot closer to the support than to the 50-day moving average or the resistance. So pay very close attention to how the stock is behaving. And if 118.74 is broken through, that just means that we're moving further into bearish territory and further away from the 50-day moving average. We're already in bearish territory. Breaking through the support is just getting us deeper and further into it to hit newer lows and newer supports. So that's going to be super important to pay close attention to on Monday and how this plays out throughout the week. Because if it breaks through that 118.36 point, this will be down onto newer lows. And then the next point would be down here, but we don't have to worry about that just yet. We'll take a look at it later in the week if it heads that way. And if it doesn't, well, then we're starting to look in an upward direction. And if this resistance is broken through, turn into a support 120.51, and it starts to work its way up, then obviously the next one would be up here closer to 121.93 and start to work its way up to newer highs and newer resistance levels. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on notifications to not miss a single video that I post. share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart, and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up, also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.